Ladies and gentlemen, good afternoon. It's now October 25th, and my name is Berggreen, ex-hedge fund manager, institutional trader, and now senior mentor here at ITPM. So I hope you've all been killing it in the markets. We certainly have within our community. Now, the title ties into a quote, that I find appropriate for what's happening in the markets right now. It's actually from Yoda. Fear is the path to the dark side. Fear leads to anger. Anger leads to hate, and hate leads to suffering. So what do I mean by that, and how does it relate to what's been going on in the market? And how can we benefit from it, and obviously add alpha like we always do to our trading activities? Well, let's have a look. We now have a major geopolitical uncertainty. Clearly, there's concern that the world is getting a step closer to potential for an all-out war. And there's a lot of fear of that creeping into the marketplace. And I'm going to show you how this is now the primary driver, really, of market prices. It used to be COVID a few years back. It was all about inflation up until not recently. It's all about economic growth. Well, now this element of fear is really starting to kick in as well. So what that means, is that decision making becomes emotional rather than rational. So when people are scared of losing money, especially fear of losing money, it's a very powerful motivator. And then you start doing stupid things. Decision making becomes irrational and jaded. And the dark side in this case refers to the situation when the fundamental rationale just goes out the window. So generating fear-based kind of feedback loops that just creates a snowball that just rolls down a hill. Now, obviously, the continued escalation in the Middle East is a scary thought for sure, especially if we throw in Iran, China, North Korea, and Russia into the mix. However, you have to realize that everybody involved knows and understands the consequence of, let's say, a nuclear showdown. So you really have to kind of weigh the probability of heading down that dark path. Now, most likely it's not going to happen. And besides, the Gaza conflict that's been going on is really the only thing that has changed the past few weeks. Like, what has changed on a macro level? Not much. So the greatest concern up until recently was inflation, right? So here's a graph of the latest inflation rate in the US. It's been coming down every consecutive month, really, for the past year, pretty much until June, where it bottomed at 3%. And then we had a little bit of a kind of a rebound. It's now stabilized at 3.7% CPI growth, which, while still a bit sticky and above the Fed target range, it's been cut in half over the past 12 months. So it's something to consider. So I would say that inflation is well within control at this point. So how about economic growth? Well, if you look at the latest ISM manufacturing release, PMI, well, it's still below 50, which signals a contraction territory. It has definitely started to move to the upside. So it's showing signs of a reversal. The services PMI has been hovering above 50 now, actually, for some time. So that's also stable. And in fact, today's Tuesday. Earlier today, we had the U.S. composite PMI Flash release. That came in at 51. You see it here on the chart, and it's been 50 for a couple of months, 51 now. So that too is kind of hovering right above 50, stable. So what I'm saying here is, in spite of all the talks about the economy heading into a full-blown recession, it's actually chugging along fairly nicely considering everything that's going on. Another thing that we look at is the yield curve, which you see here. The yield curve has been steepening dramatically. It's been inverted now for over a year, something we talk about a lot within our Discord channels. But it's now back actually to levels that it was last summer of 2022. So yes, it's still technically inverted, right? But it's getting very close to being neutral. And there's a lot of other macro releases and indicators that we look at, and I'll show you how to analyze all this stuff during mentoring. So there are still mixed signals out there for sure. I'm not saying we're out of the woods. However, the point here is that the health of the economy is not any worse off from where it was a few days ago, or a few months ago, rather. In fact, it's probably in better shape. And additionally, the Gaza conflict is likely to change the Fed's stance a little bit at least. So probably less of a chance for them to raise rates again this year because of what's going on, because they want to seek price stability, and possibly even lean towards the more dovish side or potentially talking about some type of quantitative easing. So, and if that happens, there's a good chance we're going to get a rebound in markets. Now, while the S&P 500 is hovering above major support at 4,200, which has clearly been a major level here. And you can see it on this chart for the S&P 500. The economically sensitive Russell 2000 small cap index has broken well below multi-year lows now, and is also below its pre-COVID highs. Additionally, the VIX is clean above 20. I mean, you've seen a pretty massive rally in gold. So what does all this mean? Well, these are all pretty clear signs that fear has now taken over as the primary driver of market action. And that could have major consequences when we think about coming up with trade ideas. So you say, okay, so what? What does all this mean? Well, when fear and emotional decision-making takes over, it causes irrational moves to the downside, also to the upside in certain areas of the market, in otherwise fundamentally solid stocks. So this now can lead to new and fresh trading ideas that have massive returns, when cooler heads prevail, knowing that you know what to look for clearly. And I'm not saying we're there yet, but as fear gets more and more kind of ingrained in people's heads that there's going to be some major geopolitical disaster, and that's impacting the markets, it is also creating more and more potential for ideas. So the key here will be to identify fundamentally solid companies that are trading at irrational prices, both to the upside and downside, that can also have a strong tendency to mean revert. And when timed and structured correctly, these plays can really deliver excellent returns. So as always, if you want ridiculous returns in the market, you just have to get properly educated and mentored. Stay tuned for our next episode. Peace out.